Welcome back. Well, let's get straight to the fourth headline today. IT stocks, well, they took it on the chin with the Nifty IT index down closer around 3%. In fact, stocks like Infosys, TCS and Tech Mahindra, they were down anything between 2 to around 5%. That's not all. Negative commentary from Goldman Sachs in the recent report didn't help the sector as well. Nimesh Shah is with us to run us through the key highlights of that particular report. Nimesh?
Today's standout is on the IT names, and coincidentally, on a day when Nasdaq was down 5% last night, Goldman Sachs has gone ahead and downgraded the top Indian IT names, largely on back of still high valuations, and they're not factoring in the down cycle ahead. So they've downgraded TCS, Infosys, and Tech Mahindra to sell from buy, and the only upgrade is to Wipro to buy from earlier sell. Now they believe that the US dollar revenue growth will start to materially slow down from here. So Goldman Sachs has cut the dollar revenue forecast of the top 5 Indian companies by 4% to 6% now versus their earlier estimate of 10%. I mean, all this within this backdrop, they believe that the PE multiples are still very high and not sustainable. So coming to individual names, on Infosys, they've downgraded the stock to sell now from buy. They've cut the target price sharply to 12.24 versus the earlier target price of 17.22. They've also cut the EPS estimates between FY23 and FY26 by 6%. On TCS, they've downgraded to sell now. They've cut the target price sharply there to 2611 versus the earlier target price of 3678. Even for TCS, they've cut the FY23, FY26 EPS estimates by 5%. On Tech Mahindra, again, downgrade to sell, but they had a neutral earlier, and they've got the target price of 686. The only change is Wipro, where they've upgraded the stock to a buy from sell. Again, the target price is 381. The upgrade on Wipro is purely on valuations. Otherwise, even on Wipro, they've cut marginally. They've cut the EPS as well. The big thing is they've downgraded the top 3 Indian IT names today to sell from buy, and they've sharply cut the target price and the EPS estimates as well.
Thanks a lot for that, Nimesh. Well, that brings us to the fifth headline today. State Bank of India was up closer on 2%. The company crossed market capitalization of 5 lakh crore for the first time ever. Meanwhile, Morgan Stanley has bet big on a couple of banks. That's SBI and IndusInd Bank. Abhishek Kothari joins us to fill us in with more details on that. Abhishek?
Well, Morgan Stanley had its conference wherein, they had SBI as well as IndusInd Bank management coming over there. So to start with SBI, they have an overweight rating with a target price of 675 per share. The key takeaway is that the loan growth momentum is expected to remain strong, and SBI expects margins to improve from here on onwards, given the fact that Q2 FY23 margins will start showing improvement. So asset quality remains benign, and digital initiatives are gaining strong traction. So in terms of operating efficiency or cost to income ratio, they expect that to moderate over the next 2 years. Morgan Stanley is also written on IndusInd Bank, wherein they have an overweight rating and a target price of 1,400 per share. The key takeaway from management, in their conference is that growth visibility continues to improve. The deposit traction is coming back. So IndusInd is targeting deposit growth of 18 to 20%, led by strong traction that they are seeing in their new initiative. Margins should remain stable despite a rising interest rate scenario. Slippages or formation of bad loans, that should moderate, and that would help in keeping the credit cost under control. That is around 120 to 150 basis points. Back to you.
Thanks a lot for that, Abhishek. Well, the National Logistics Policy 2022 that aims to lower logistic costs to global standards is set to be released soon. The policy expects to help India rank among the top 25 nations on the logistics performance. Parikshit Luthra is with us to fill us in with more on that. Parikshit?
Well, yes, the National Logistics Policy has been under work since 2019. The government has been aiming to bring down the cost of logistics from 14% to 8%. And this, we believe, will be in that direction. What this policy would do, it has 3 specific targets: to reduce cost of logistics in line with global benchmarks by 2030. They also want India to be among the top 25 nations in terms of logistics performance index ranking, creating a data-driven support support mechanism for efficiency in logistics. The National Logistics Policy 2022 will create a single point of reference for all logistics and trade facilitation. It also envisages promoting development of multimodal interconnected infrastructure, standardization of physical assets, benchmarking service levels, and harmonization of documentation. The policy aims to provide for an integrated digital logistics system, and it will essentially be a comprehensive framework which will cover all subsectors of the logistics sector, make sure that nobody works in their own separate ways. There will be an empowered group of secretaries under the PM Gati Shakti program, which will monitor the implementation of the National Logistics Policy, and there will be a service improvement group as well. No financial implications of the NLP, expenditure to be incurred by different ministries in line with existing procedures.
Thanks a lot for that, Parikshit. Clearly, logistics stocks ahead on the back of that news. Well, Siemens as well was up close to 2%. The company is focusing on strong capex cycle playing out here in India. At the India Innovation Day event held in Mumbai, Siemens said that they expect strong traction in roads, renewables, railways, and process industries. Vahista is joining us to run us through the key takeaways. Vahista?
Siemens had held an Innovation Day 2022 meet yesterday where the company has emphasized on the strong capex cycle which is playing out in India at present. Also, with a high capacity utilization across industries in India, the company expects a strong traction in roads, railways, process industries, etc. 2 months ago, Siemens had launched their open digital business platform which was called Siemens Accelerator, which finds its application across industries, which is in grids, in transportation, in building segments, and company has also said that India will continue to be a critical market for the company as a whole. Siemens is aiming to target the SME segment henceforth, which will allow it to scale up and add up new designs and components into their product portfolio. The energy landscape is actually changing faster than they had anticipated and is leading the increased decarbonization in the country. Now, some of the key growth drivers for Siemens could possibly be the favorable government regulations for localization of data. There's an exponential growth in the digital communication and the launch of 5G services. However, there could also be some risks for the stock, which is a slowdown in capex and a slowdown in the research and development spending towards automation and digitization.
We're talking about black swan events having hit us almost every month in the last couple of years. And how do you develop and create a resilient organization, a reliable organization, at the same time using flexibility?
2 months ago, we launched what we called Siemens Accelerator. And what is great about it is that India has a major part in it, and I will explain a little bit to you why that is the case. So why did we launch Siemens Accelerator? Our customers that we serve across infrastructure, industries, mobility, energy, they all are saying that not only do they need to be more productive, they need to provide better quality, but they now have to become resilient and they have to become more sustainable.
Well, moving on to the auto sector now, Maruti Suzuki is upbeat about its strong booking trend ahead of the festive season. The company's executive director, Shashank Srivastav, told CNBC-TV18 that they are anticipating strong season provided that the production is as per demand. The company has over 4 lakh pending bookings. Let's listen in.
We have seen a strong booking trend so far, and going forward in the festive season, I expect the festive season to be strong, provided, of course, that we are able to produce vehicles according to the underlying demand pattern. There is a lot of pending bookings at the OEMs across the industry and also at Maruti Suzuki. We have about 425,000 bookings which are pending. So I expect the season to be strong.
Well, Indian retailers are seeing strong sales growth across categories, with August sales rising 15% over pre-COVID levels. However, the Retailers Association of India still sees inflation as a bit of a pressure point.
Till the month of July, we had seen that buying was happening across all price points, and that was very encouraging. I wouldn't call it revenge buying, I'd call it a cheer buying. There was always this worry of inflation, in the month of August, we've seen that the sales for the lower price point, the entry price point across categories, be it garments, footwear, like what Nilesh said about electronics, I think everywhere there has been a pause.
Well, on that note, we'll wrap up on this edition of Markets Today. Thanks so much for watching.